Hi, everyone. Just before we get going, I want to remind you that everything we talk about and discuss should not be considered as investment advice. The purpose of what we talk about on Catherine Murray Media and Markets on YouTube, as well as Catherine Murray in Conversation With on my podcast, should be viewed as informational and entertainment purposes only. Please definitely do your own research, your own homework, and definitely consult an investment professional before making any investment decisions. And also to note, some of us might hold positions in some of the stocks that we discuss.
So I started, environmental engineering Waterloo, then went straight to Bay Street, straight to TD Asset Management. And, my goal was always like, I wanted to do things on the sustainability side, right? Environmental, et cetera. But, you have to grind through. I was on the bond desk, and then, then I went to global equities. But then, the opportunity came where we built the franchise from scratch, the sustainability franchise at TD. So that's how it all started. And that was in 2007. I was actually reminding my colleague Scott about that. That was in 2007. So we were the first bank to really push out sustainability. Now, a little ahead of our time would be an understatement. That
would be an understatement.
It was, right? And you're trying to convince, like, for lack of a better term, suits that, this is, you have to build something here and, build towards it. And then, that kind of built, I took over the resource franchise. I was a co-manager on the flagship Canadian equity funds as well. But, at the end of the day, it's where your heart is, right? And, ultimately you got to be like, you want to be direct drive in your life, right? And I had the pleasure of meeting one of the greatest analysts I've ever worked with in Scott Willis, who was he was based in New York. We met at a bar. It was an energy conference. I think it was Barclays Energy Conference. Exactly. There was a bar across the street. We never returned to the conference. We just kept drinking. We're like, and it was like, it was like we, our wavelengths were on the same place, and we, it was great. And then we just kind of, then we tag teamed it. In finance, if you can meet your yin and yang in terms of, like, your skill sets don't overlap. You're not always trying to take the, the high, like, finance is filled with a bunch of people that are always got ego, you know what I mean? You meet people that don't have ego. You just want to win. And, you just want to get that information and understanding, like, and Scott and I just kind of built that. But then the part that really, the missing link was James Alfred, who basically is our whole creative. So if you ever see anything from Grizzle, it has like a very clear visual aesthetic. And that was, we just felt like, hey, listen, let's pop something new for millennials. Something we knew the banks weren't servicing them. We knew the asset managers. It was a very just old construct. And we just said, listen, if we're going to do this, we're not going to do this with just like a sports blazer. Let's just go full out. You know what I mean? I'm not going to go from my TD uniform to a sports blazer. Let's just go full out. Just tell the story, be ourselves, have a good time first and foremost. I think if you come at it with having a good time, I think great things follow through.
Yeah, I think so as well. That was certainly one of my, to your point on the yin and the yang, a partner of mine at Deutsche Bank. We were exactly that. And his big mantra was always like, we got to have fun. We got to enjoy doing this. And we did. And the clients loved it on the institutional side. People would be insulted if they weren't invited to one of our events, where so many salespeople were trying to get the clients to get to their events.
Well, you have something special there, right? That's like when that magnetism just, you don't have to, it doesn't have to be forced. You don't have to push, all that stuff.
Yeah. So tell me this though. It's so interesting though, that you have been gearing this to millennials, and certainly there's going to be so much to talk about in terms of the meme stocks and, and also too, I think what's been really interesting is watching some of the younger people, actually a nephew of mine, who's so interested to learn how to make money in the market. And I, in fact, actually hooked him up with one of the guys who I think is one of the best technical analysts out there, period, and gave him lessons. This is an institutional technical analyst, and he so wants to help and kind of teach people how to understand the technicals that, he's actually educating some of them. Like, that's a whole nother time business for him to manage. But so tell me about how you see the millennial, like why that was, obviously it's an unmet perhaps market need, and that was the most obvious place to go. But How are you approaching them?
Yeah, so I guess so now Grizzle's 3.5+ years, right? And our view was that there was this unmet need, totally, and clearly what we felt is that like we're not going to start an investment orientated firm and talk about railways and utilities it's got to be about stocks that people care about, sectors that people care about, the likes of that's how we got into cannabis, fake meat, plant-based meat. But yeah, no, I think that we're coming from this exact same place in the sense of we feel that there's a lot of excitement and just seeing what's happening in terms of all the youth, young people that have been drawn to investing. This is just a golden era. And I literally say, who cares if they lose all their money? They don't really have much to begin with. Like literally the lessons you can get from like getting totally steamrolled you're like, whatever, you're how old, 19, 20, whatever your age, you lose all your money. You're like, damn it. But the amount of time you spent learning and the things you picked up are so profound. And I learned that way, right? I still remember the crap that I bought, Spider's Resources. I bought it for 9 cents and then it was some sort of crap pump and dump. Went to 2. I literally didn't look at it for another 5 years. I was like, oh man. And then it came back up to 12 cents. I'm like, I can't believe it. It's got caught in another pump and dump and then I sold right away. But literally that is all like, all of that energy, that excitement, it's all coming back. It's exciting. This is the place to be.
Well, so it's interesting though, when you say, you have to learn about a lot of different aspects of all of this. And, I read your briefings in terms of what you've been sending out. What I thought was so interesting was your point about you got to get inflation right. Now, I don't know if you still believe that, but got to get inflation right to figure out where the market's going to go, because everything is priced on interest rates and discount rates. So, I mean, it's exciting to go right into the meme stocks, but I actually think we might need to start there. What do you think?
Yeah, for sure. Like, inflation is and everyone's talking inflation. This is the thing, right? The lumber memes were going,
oh my God, we can take inflation into lumber and make them into memes. Like, just think about that for a second.
Totally. And what was interesting is and we kind of have to veer into Bitcoin as well, because the interest in inflation, I would truly say if Bitcoin wasn't around, if you didn't have this asset that is very like, gold bugs, I know gold bugs. This, anyone who's 20 to 20 late 30s may not be as well versed with the gold bug era and the gold bugs. But what they don't understand is the Bitcoiners are the gold bugs. They are always worried about inflation, right? So this preoccupation with inflation, understanding it and having this asset that with Bitcoin that's so like almost antenna up, concerned with inflation, I think 100%, because if you get your inflation call wrong and Bitcoin, where let's just say we have deflation or the Fed starts to increase interest rates, what does that do to the Bitcoin narrative, right? And that, so because Bitcoin is so central in this wave of money, I think that's why you have to, you at least have to be on the right side of it.
Yeah. But also I think too, when we think about why Bitcoin goes up or down or has gained so much attention and attraction, is in part also because of many people recognizing that the central banks have been printing money for many years. Right. And at some point people are saying, wait a second, there's just too much global debt going on. So that's the other key reason, don't you think?
Yeah, for sure. And but like when you look at it from the gold bugs time, they were right too. Like literally nothing's changed. Like interest rates kept going down. You still continue to have QE through the whole period. But what we didn't have was inflation because we didn't have velocity of money, right? So this comes back to, are you going to become Japan, which is you have basically money printing, negative interest rates, the whole thing. They threw everything at it. But Japanese people just chose to put it under their bed, right? Like they weren't going out and spending that money, and banks weren't lending it. So where we think interest rates are, and understanding it at least, is knowing, like, are you going to get that velocity of money, right? Sorry, inflation. Are you going to get that velocity of money? And that really is the crux of where we sit right now.
And so what do you think? I mean, we're going to have the Fed out tomorrow while we're on the topic. And the market, the bond market in particular, is believing that the Fed is going to be accurate in saying in that inflation that we're seeing is in fact transitory. It's bottlenecks, it's supply chain issues.
Yep.
And then we'll be back to, mediocre numbers on the inflation front. What do you think?
So right now, the bond market, obviously, you're seeing yields come back in, and what I'd say is, it's the bond market's really tough to tell too, because it's being manipulated as well. Like, the long yields, you're seeing the Fed buy out there as well, right? So you are seeing it now. It's not being called. You're not getting the official. We're entering a new era. We're going to buy up. Yield curve control. That's the term. They're not officially saying it, but they are doing it functionally, right? And so, how much are they managing the long end? That's an issue. But I think the bigger nugget is what. So for consumers' expectations of inflation, it's when does that get unanchored, right? So no matter where inflation is over the near term, people say, yeah, well, I know inflation right now is about 5%, 6%, fine. But there's a wonderful chart that says, okay, yeah, but when you ask them that same question about 5 years out, it's always like, yeah, 2.5, and it never veers from that 2.5 to 3. It's if that starts to get dislocated, then you get people doing irrational things, or rational things if it's an inflationary environment where you end up hoarding things and you start the cycle, right? Which is what the gold bug mantra, et cetera, that.
And so what do you think, or how far out are you planning? Are you thinking just in the moment? I don't know how much of a trader you are.
Yeah.
In terms of your recommendations, but what are you thinking then?
Yeah, so we don't trade a ton, right? So we're investors long term. We think what you do is that we don't think the hyperinflation camp, I think is I don't think that's an outcome that we're planning for, right? But we do think there are elements of inflation that aren't going to go away, right? So I think you can say, yes, lumber's going to come back, and that will come back, right? Like, we know that that's a supply issue, and that'll get resolved. But when you think of things like copper, that's something that basically you needed to tap that market 10, 15 years ago. You can't be like, oh, listen, so I think you're in this place where there's excess there's enough kindling in the system to stoke demand. This is not going to turn into Japan, but we're not going to get hyperinflation. So you get this scenario where certain commodities will feel inflation, and then also in that same backdrop, growth stocks will still do well because it's not run away, and interest rates haven't increased to such a level where you need to contain the whole thing.
So you're kind of describing a bit of a Goldilocks scenario, which is probably what we've been in since 2008.
Yeah, I would say there is an element of Goldilocks in the sense that, like, I would still say that inflation is a worry in the sense that we can't afford a world where interest rates double, if you know what I mean, right?
Yeah.
So what you're going to end up getting is devaluation of currency, right? So there will be that dislocation. The real question, and I don't think it'll be a good one, is if Bitcoin and gold moon, those will signal, they go totally berserk, right? Something slow and steady for both of them is totally okay. But if they start to go parabolic up, I think then you have to reassess everything. But right now, yeah, it feels like gold. Like, I'd be careful to say Goldilocks, right? Seeing your currency devalue it's not a great outcome, but you want to own the things that get the uplift from inflation.
Yeah, and to your point earlier about the commodities and lumber coming back, but copper maybe not so much. I mean, WTI is also a perfect example of that as well, in terms of the lack of investment spending in the sector for the past number of years, having been vilified, etc. Yep. Now, because of that, and the goal towards ESG investing, which is so interesting that's what you were so interested in, even way ahead of anybody else, that here we are really seeing a pickup in the price of crude. Where do you think it goes? I mean, we're not even open around the world in terms of getting out of COVID. So, obviously currencies, commodities, they can move ahead of the fundamentals, but what are you thinking on that front?
Yeah, so I'm far more bullish on copper just because, I understand the constraints around mining and what it takes to bring a mine online. It's incredibly hard. I also know how quickly you can bring a shale oil well back online, right? So the difference is, so I believe that we're in a constructive environment for oil and gas, but I don't think it is a wildly bullish one that you can get for copper, right? Because you have this on-demand supply from the U.S. that has proven that it comes back, right? And also, if you start to get Iran back on, all of these other pieces that ultimately could fill supply. I think for oil, it's a little trickier. I know, some bulls want to, really want to paint the most bullish scenario there, but I think the other aspects that I can't tell. I know copper is really backed by demand because housing, electrification. I can give you all the reasons, and I know those are going to fall through. With oil, I struggle with also the new reality of work from home, the flights, on the demand side. I don't quite know if it'll come back to where it was, right? I know for myself, the amount of traveling I did for business, a lot of that will be curtailed, right? And transportation's airlines are not an insignificant part of the demand mix.
Right, got it. Copper's at a 7-week low, though. Is it an opportunity here?
Yeah, I would. So from our perspective, it's the one commodity that we like in terms of an inflation protection mix. An opportunity. If you missed it, you could probably get back into it. But yeah, no, I'm not that concerned at all. We're still at a very attractive price level. It's from my perspective. I'm trying to think what we've done year over year, but still, when you look at what lumber did, lumber went parabolic to do all-time highs. Copper's still in around, where it was, right? It still has another breakout left to happen.
Okay. And just to go back to, and again, I want people to understand that you were on the buy side, 2002 to 2017, director of research for Global Resources.
That's right. I was doing resources. Yeah, resources the whole time. I started with utilities, then went to energy, and through the whole time, we were investing in windmills, Gamesa in Spain, and Vestas in Denmark. I've seen it all. I've seen the highs.
Seen it all. We're gonna go through it all ish. But I want to go back to what we were just talking about as it relates to targeting the millennials. So tell me what your approach is.
Yeah. So I think the millennial growth sectors are some of the most poised that anyone should have exposure to, right? I think if you're in an index fund, and you're just like, you're following a narrative that's very boomer, right? Things will come back, the world will come back to normal. Oil will be 100 and, all these sorts of things. I think you could be you could be put in a very, very tough position, right? And not having exposure to millennial growth sectors like psychedelics, like cannabis, like plant-based foods, just to shun all of that and stay with an index that is very fuddy-duddy, very boomer-esque, and that's what index investing is. I think that's really we've just completed the index revolution, where basically everyone scurried to the lowest cost you could find. The markets all go up together, bada bing, bada boom, and then now we're entering the new revolution where it comes back to active. It's exciting again. Meme stocks are showing that. Like, that's totally an aberration that no one could have seen. It is what it is, but it's showing you there are ways to pick off the market in new and differentiated ways, and investors are very open to those ideas. And I think that's if you can't be creative right now, if you can't identify new trends, you're just working on reversion to the mean of these old industries, etc. You're gonna be in for a rude surprise. And you already have been, right? You should have been overweight technology through the last 20 years, right? But everyone's like, oh, well, these things just went down. I'll just keep adding. I'll just keep backing into these old businesses like craft and all this stuff.
Right. And to your point, even when Amazon was trading at a high number that nobody could kind of justify from a valuation perspective, to your point, you had to really get out there and think about, okay, well, what would Amazon be, 5 years down the road? That was hard for a lot of people to do, to be able to buy in.
Totally. And Catherine, you probably know now this same people you were telling that you talked to, and not naming names, but a different generational set of portfolio managers. I know them. They're all thinking the same. They're like, oh no, Google too expensive. This was like 7 years ago. Facebook's too expensive. All this stuff too expensive. Amazon, crazy. Now they're like, you need to own Google. You need to own Facebook. This is cheap. I'm like, wait a minute, you are doing exactly what you were doing back then, which is basically when these guys are like the negative indicator, right? They're your contra indicator when they're saying, like, now, mind you, I like Google and I like Facebook, but
I was going to ask,
but it's gonna, but it tells you a lot, right? When basically the value construct has moved this far, where now they're viewing, all of this SaaS stuff is crazy. Let's just stay here. And sure as day comes to night, you look 10 years out, they'll be like, oh, I wish I owned some of that SaaS, but here I am.
So, well, that's a great point. So, now people who are listening who aren't the millennials, who are probably more my followers, but maybe I'll get some millennials.
Oh, no, there's some millennials here. Oh, the Murray man. We got a lot of our followers. Grizzle putting in the work for their followers.
Okay. Perfect. Because I think though that you do want a balanced portfolio, and you being a portfolio manager for all those years, you obviously know that. And I do like to look at some of the stocks and say, this is trading at a discount and there will be a reversion to the mean, or there are some good growth opportunities, and not wanting the volatility and the risk parameters that, a high, like a lower market cap company might be, or a new edge. So, I don't know. We're going to talk though about, those more meme stocks and those areas, but are there any of those kind of big old tech names? And to your point, software as a service, that was my whole point. Yep. I look at some of those stocks because they've proven themselves. We know they're great quality. Yep. Maybe there was some overvaluation, some of them, but what you're telling me too, is that still an area to go into for the next 10 years?
Yeah, so we are still valuation focused. So all these things I'm saying here, we still have a lens of value because I think you have to, right? And which is what leads us to, in the US cannabis space, we think you can pick off companies there for 7 times EV EBITDA, like very low multiples. Like, they actually have EBITDA. That's the thing, right? They're actually, they have margins. So you can pick off companies that actually are profitable, that don't trade on totally crazy multiples, that reasonable. So I think you can definitely find growth at a reasonable price. And I don't like the term GARP is always one of these, everyone says they're GARP. Who doesn't want growth? I just want, anyone who says they're not GARP is lying to themselves, right? Yes, I'm growth at a reasonable price. Who says they want no growth at a very cheap price? Like, nobody wants that, right? Right. And I think that's the part is, what part of the ecosystem are we in now? And I still think commodities, so taking that lens of, somebody who's saying, listen, I still can't devoid myself from value. I still need to figure it out. Go buy tons of copper, right? Gold miners are, they have the largest free cash flow yield ever in the history of, in the last 30 years. So I think you're in this beautiful time where you can take the bet on growth, do it, and you can take the bet on commodities. Hey, and listen, if I'm wrong on one, I win massively on the other. And if I'm right on this, I think you win on both, which is the Goldilocks scenario where you get in certain commodity tracks, you get real inflation, like not lumber, i.e., we definitely weren't advocating following that thing. We said it was a Canadian cartel activity, and that's proven to be right. It's
What? No.
Yes, if Canadian cartel activity is what was, it was the lumber mills. The mills themselves were the trees were not the problem. But net you look at certain supply demand mixes. You say, listen, lumber is not going to continue mooning. In fact, it'll come down. But when you think of things like copper, oil and gas, the other part that I like is natural gas. I think if I had to be bullish on something super medium term, is natural gas.
Okay. Yeah. Got it. Yeah. No, I've heard that from another person as well to go long nat gas. But let's go back to let's start with some of the meme stocks these days. Yeah, I mean, maybe for my non-millennial viewers, Describe what this is, how it happened. People are saying this is in fact a new asset class.
Yep. So, I think I think everyone was so the power of Reddit, Wall Street Bets, and can't just like Twitter has been a huge part of this. This is the new avant-garde of investing, right? And Twitter itself is so powerful, right? And so since leaving Bay Street, buy side, large asset management. So the amount of, as you know, Catherine, the amount of information that you get being at a shop like TD, it spoils you, right? Because you're like, hey, call this broker, I get this, that, anything you want, you can have in terms of research. And then you leave, you're like, okay, and now what? You know what I mean? But we then were, because at TD, we couldn't even have Twitter. So, you know what I mean? But now, then I found Twitter. I'm like, this is amazing. This is literally, so when I tell somebody, a young person that comes to see me, like, oh, what should I do? I'm like, do exactly the opposite of what what anyone would have told you like 10 years ago, right? Oh, well, follow this, do an associate here. No, just spend your time on Twitter. Reddit is a little bonkers, but irrespective, there's a ton of information, there's a ton of education happening that is not going away. This is the new world, and this is for real, and it's for here to stay. Now, some of the strategies that have been used for meme stock, I don't know if those will survive, but I think the population, the community, this is not going to go away, irrespective of some of these guys getting wiped out, and they will. But and maybe some will win to live another day. But just the excitement in the market and bringing everyone to think about money and how to grow money, I think, is an incredible thing that we could only hope for something like this.
So in other words, you're saying that the positive out of these stocks, this maybe asset class, is that people can chat on their own, that there is a democratization of understanding stocks and stories. We hope, versus having to have access to information.
Yes, for sure. And like the idea, the beauty of social networks is that, the greatest ideas always bubble to the top, right? So hopefully you're not in a silo of like all the wrong information. But if I go on Twitter, I know, from the people that I follow, you're getting great retweets of really good information. And that is the part where the education that you can get on Twitter, the access to some of the greatest minds in the world is just incredible. And I think that is just the greatest equalizer, right? It's not like I have to wait for a call from a certain broker to tell me, something's happening, right?
Well, no, and that's a great point. Like when I do see some of the, the most famous and rightly so investors out there, and again, I'm not going to name names, but when I see their comments on Twitter, I'm like, okay, I like that perspective. I like how he's looking at things. Now, of course, I always love to see them interviewed as well because it's a longer conversation, but at least kind of gives you a snippet in terms of what they're thinking. But it's funny because the way you describe how to look at investing now versus in the past and not to do it in the past, I guess I'm old because I would still recommend to young people, read the 10Ks, read the 10Qs, read those footnotes because you'll see some of the most important things in there.
Yeah, so I have to be clear, right? So I'm saying, old pathways of, go knock on every door, go to Scotia, go to, get that back office job, work towards the front office. I'd say you can skip all of that and go right to Twitter and start to learn, like, see what other people, like the cannabis sector has been phenomenal. There's been some phenomenal fundamental analysts in the cannabis sector that show their work going to CDAR, pulling these things. So if you want to learn, it's all there for you, and it's an incredible walkthrough. And the nice thing about it is they're one DM away, one direct message away from you saying, listen, I didn't quite understand that. What were you thinking? That kind of access to insights and great minds, incredible. Now, to your point, right? So definitely, so it's bringing all that fundamental work. We're fundamental analysts, right? The way we look at, we're fundamental portfolio managers. So we think those things are bedrocks of understanding value. You can't be totally devoid of that. And bringing it up, there was an interesting graph that I saw literally last week. It was from the FT that was looking at the number of machines, so programs, et cetera, that were pulling basically 10K filings, all SEC filings, and basically it had gone parabolic.
Oh, wow.
So here's an interesting take on what you're saying, right? So what I'd say is yes, that fundamental work is critical, but here's another layer. Add a computer machine element to it. Get like, because the biggest challenge that I have is I have 100 of these reports to get through. Can a machine tell me to just focus on 10? Great. Right? What kind of AI, what kind of, what's there out there that could help me, right? Be it like, I know there's a lot of those things now that listen to conference calls, and then they do the, what's it called? You know what I'm talking about? Like
Word count?
Yeah. Like diagnostics to say, like whether they're lying, what was their, all of that stuff is really important, right? If you piece it together, I think, and we've seen a phenomenal number of complete frauds, right? There was that Lordstown Motors and all this sort of stuff, right? Lots of really fake businesses out there during this whole time.
And I don't know about that company at all. I mean, obviously it's been in the news, but I can't comment on that.
But basically, these SPAC vehicles have basically incorporated a lot. And so talking about all this whole nouveau of ESG and environment, right? So by definition, you attract hucksters. And the EV space has attracted a plethora of hucksters again. So this is where I think fundamental analysis makes a ton of sense, right? So here you would identify, some of these companies this doesn't look real, feel real, and for the most part, they weren't real. Like one company was basically they were showing their model, they rolled it down a hill, right? Like that kind of just absolute absurd lies. But you were in a mania of sorts for environmental assets, so you can get that sort of stuff.
So let's talk about the cannabis sector, where you have done a lot of fundamental analysis. And just describe to me why this is such an opportunity. I mean, obviously, especially being in Canada, I mean, we've been following it for so many years now. I still don't understand what the true end market demand is or will be. And looking at the business models, you talk about the US ones having good margins.
Yep.
I mean, talk to me about the fundamentals.
Yeah, so I think you really nailed it. It's a tale of two countries. There's Canada and then there's the US, right? And I think if you look at what happened in Canada, it's everything that it's a classic situation where you didn't have great operators to begin with. It was a hype bubble. The leaders have all been proven to be poor at everything they did, right? From the top, right? From Canopy to Aurora, this is a complete decimation, right? This is not like gold. This is not like, our oil and gas companies where you have some companies that are left that are strong, but you don't have a Suncor here. So put it another way, if I were to compare Canadian oil versus Canadian cannabis, we don't even have a Suncor in Canadian cannabis, right? To put it that way. So a complete sector that was mismanaged, didn't understand their own supply demand situation, how it was going to play out, and lastly, didn't even have a product that consumers wanted. So those are all the things that come together in cannabis, right? So you had in Canadian cannabis, in America, in the US, we're still very early, right? It's obviously still not legal at a federal level there. But in addition to that, you've had companies that had to be lean and profitable as they've expanded state by state. And that is the big difference, right? You see companies that are growing both top line and and their profit line, right? So that is something that just never existed in Canada.
So what is, though, from a federal perspective and it not being legal in the United States and going state by state, how does that actually impact the business model in terms of, I don't know, consolidating the business model, being able to have leverage within the business and therefore getting profit margins? I mean, just tell us how you think about this, and therefore, what kind of stocks do you like?
Yeah, so we think, irrespective of when it becomes legal at a federal level, I think the tailwinds of just growth, taking something that was in the black market and bringing, state by state, as you do that, you get this natural tailwind that irrespective it will work, right? Now, if you get, there are certain aspects of the business that, we had just had a cannabis conference that, we heard some very interesting tidbits, right? Where basically, it's still a cash business, right? So when you go to a dispensary in Florida, you can't use credit cards. You're doing everything by cash or in some cases debit, but not credit cards. So imagine when that happens, where you get a situation where banking is allowed. And I think that you really get to a much better place in terms of just additional tailwinds that come through. So these companies have been great. Like, so TrueLeaf is a great example. They've been able to grow on an annualized growth rate of 130% per year. And all of that doing it, by doing like a high 30% margin, EBITDA margin, right? So from our perspective, this is a company that's thriving in an environment where things are still tough, right? Someone can't come in with a credit card and buy things, right? And what happens when that day comes? And I think that's the opportunity, but you have to be selective. It's about picking the right US stocks. There's, like every growth sector, 90% of things are not worth owning.
But Thomas, when you take a look at those numbers that you just gave in terms of the top line growth and the profit margin, I think this is so important to understand that, when I was back at William Blair in the late 90s, doing equity research on .com companies, there are standards that are allowed in new industries in terms of, gross versus net. What you're allowed to pull out put on the side in terms of your income statement and your expenses. So is there anything there that we need to know about? Because when you talk about those kind of numbers, you got to understand what they actually are.
Yeah, no. And from our perspective, there isn't a lot. It's not. It was at WeWork that was using community adjusted EBITDA, right? This isn't. There isn't. You're not standing on your head to get to these numbers. This is just the natural profitability of these businesses. So it's much cleaner than a lot of other. Like, I would say on the tech side, there's a lot more creativeness, if you will.
Okay.
Yeah. Because those companies are. Many of the companies are still early stage, and they're literally, so they'll have very high gross margins, but then, as you clearly said, it's everything underneath the gross margin that can you even get to EBITDA, and very much, most of the time, that's a struggle.
And earnings, like what are you earning, and how many times do you have to go to the market and raise capital?
Yeah. And the thing is, it's when a company is growing 130% per year, that sort of thing, you're open to providing capital, because that's the right capital allocation decision, right? It's especially if you're earning your cost of capital.
Yeah. I'm not saying it's wrong. It's just sometimes, particularly it's more on the private equity VC side where you don't want to continue to get diluted.
Yep.
So, okay. But
sure.
in cannabis, TrueLeaf is the one that you like?
So, we were talking three picks, but I would say any of the top operators for somebody so we have an entire basket we have an entire portfolio, Grizzle Cannabis portfolio that we publish monthly, and it's open to the world, and so anyone can look at them. So we think a nice mix of stocks across the board. It's always hard to name one because you want to take a portfolio approach, but we think, TrueLeaf, Cresco, Curaleaf, TerraSend, there's a bunch of top operators that I think could deserve a spot in terms of, like, if you just had to own a one or two, but we also think you should own some of the more growthy names, right? They're smaller, and it gives you that growth exposure, because obviously the larger companies are not going to have that explosive level of growth, even though they're growing top line at, call it 100%, high 70s, 80s.
And are those the growers, the ones that you mentioned?
No, yeah. So the largest companies are growing that much, but the growers are growing, in excess of 200-300% year over year.
What would be one name?
Yeah, so Gage Cannabis is one. So we've looked at Glasshouse is another, Vireo. Now there are several names that are definitely in that arena that, because of just their size, the states that they're about to move into, that's just the math works out that way, because they have all the licenses to move into these new states, right? And these states are on off, so some will just be medical alone, and others will have, so they'll just be opening for the first time medical, but others will be medical and now they're just opening for rec. So you have these gates that open up, and new growth sprints start all the time.
Okay, so let me ask this, because again, I do try to understand the cannabis sector. Yeah. And probably not that well. So, but if we're looking at a pie 100%, what percentage do you think is recreational? What will be medical? What is the true demand? I mean, who knew that we needed all these cannabis companies? And I understand, of course, it's taken from the black market, which also brings me to question the pricing, because that's something that, you know, we've looked at here in Canada as it relates to, are you really taking it off the street? And with the rules and regulations, people are allowed to grow at home.
Yeah.
How does that all make a great business model?
Right. And so from our perspective, Canada is a very different situation than America, right? The way these states are opening up. Also, in America, the tolerance of home grow is not the same as it is in Canada, right? Like, so in certain states, right? You're not going to get the same situation where, oh yeah, okay, yeah, everyone's got 7 plants in their backyard. That's not, you know, in New York, New York State, that may not be the case. You know, other states are not going to have that kind of situation. It's still America is still a very, you know, there's that police element that, you know, you're not going to have that aspect. Cannabis in the US, we still think we're in, like, using the baseball analogy, we're in the 4th or 5th inning, maybe, likely earlier, right? So there's still significant significant runway ahead.
Okay, I want to talk about psychedelics, and this was kind of really brought to my attention from one of the exchanges in Canada that I think has taken quite a few companies public. So what's, and you know, Kevin O'Leary, seeing him in the studio a number of years ago, he was talking to me about psychedelics then, was invested in one. I can't remember the name of it now.
Yeah, he was
I'm sure. What is it?
Mind Med.
Okay.
Which unfortunately for them, the CEO had left abruptly, and who else was who's there? What's his name? Bruce Linton was involved.
Oh.
And yeah, so like kind of messy situation where basically
don't talk about it. Only positive.
We have to. You can't. You know what? This is But I'll tell you, Catherine. You know what? This is the problem. I'll tell you the truth, right? The problem is there's just like, you know, a lot of people just get into stocks to get hyped, and then they end up becoming skeleton companies, right? And, you know, you're like, wait, what's happened? CEO's gone. You know, people have all sold their shares, and then you know, this is that classic situation where you get, you know, we're in millennial. This is the biggest risk in millennial investing, is that most of these companies are like, so many of them will not make it to the finish line.
Okay, don't name names.
No, but irrespective, you know, obviously, like, I think the share price has done incredibly well, but we think, you know, there's an interesting, we're at an interesting juncture, specifically where the opportunity, where society accepting psychedelics is a far, you know, we're in a far better place for sure.
So, you know, quite frankly, I don't know anything about psychedelics. I mean, I say that in the sense that I don't take I actually don't even take asprin. Right, very boring here. I do like Chardonnay, but that's it. Good. That's enough for this person here.
Well, you know, I'll give you a little bit of, I'll give you a little background on my history with psychedelics, and so I was an open recreational user of psychedelics and cannabis, et cetera. But what really took me over to the medical side of the benefits of it is I was getting these incredibly bad cluster migraine headaches, incredibly bad. So if you know anyone that's been afflicted with it, what ends up happening is it comes back at the same time of the year. And it's just like every day you wake up and it's like Groundhog's Day. It just comes and it just basically locks you in, right? And then, you know, if you know anyone that has it, they'll just say, okay, well, you've tried your Advil, aspirins, whatever, and none of it's working. So now we're going to give you something really strong. And for the most part, that doesn't work either. So you're left battling this until, you know, the cluster migraine goes away. So then a friend of mine, you know, they said, listen, have you tried magic mushrooms? And I like, no, you get frustrated. You're like, I can try it. And basically it took it away completely. And I'll explain to you what happened. Like, I'll give you the best example of it. A cluster migraine is like basically a record that's skipping, right? And all you want every day is that skipping to stop. You just want it to, you know, you want it to just pop over. And I think of what happens, and when you take psilocybin, which is the active ingredient in magic mushrooms, it basically is like someone lifting the needle off the record and putting it on the groove again in your back, right? And that was my experience specifically with cluster migraines. I'm like, This is incredible. And, you know, the most beautiful part about that is, Catherine, I wasn't having to take psychedelics every day for the rest of my life. Someone's not like, you know what I mean? Like, I don't have to live in this, you know, like, you know, I basically, you take it once and it does, it takes care of that. And so I knock on fake wood here. That was 4 years ago. 4 years before I started at Grizzle, you know, and I had that for basically 2.5 years and gone, never go back. Yep.
So, but then if it helps you that much, I mean, what do you actually think will be the market opportunity here?
Huge. Like if the norm right now is to treat somebody with this, you know, this scaling of all these pain medications that don't actually address the problem, and I'm just starting with cluster migraines, which is a huge problem, and that itself is a big problem. But once you start to tackle depression, right now, that is something that I've also dealt with, and I know a lot of people that, you know, in their family, and I've seen my mom go through basically, you know, what should have been treated with counseling, instead treated with pills, right? It's like, okay, but then, you know, you can't, once you start on that treadmill of this stuff, you can't get off. And I'm talking about depression medication, right? And I don't know anyone that has been, that had to deal with depression that's ever said, amazing, I love how pharma's helped me. They curse.
It's a great point.
They curse.
Well, they say it helps a little, but it certainly doesn't help a lot, is what I hear.
You know, like if it helps, they need to take it because it's where they are, they're cornered, right? But if you were to ask them, has their life been appreciably better, you know, in the last 5 years, they'll say no. No one I know that says this is great. I love taking these pills every day. You know, it's not like the polio vaccine or the coronavirus vaccine. Those things were great or whatever, right? You know, everyone's I know so-and-so that had polio. I don't have polio, you know, but what we have in depression is you have a classic situation where the standard treatment is a terrible treatment. It's a terrible treatment. And what you have now for treating things all the way from, you know, serious depression, to PTSD, all of these challenges, these very, very serious issues, mental issues, can be dealt with psychedelics.
So where are we though, as it relates to the medical community, doctors? I don't know if they issue prescriptions for this. I assume they would. FDA approval. And what are the companies you're looking at, and where do they fit into this whole conversation?
Yeah, so one of the companies we did a really big deep dive on was Compass Pathways, right? We felt that they were one of the most advanced in terms of what they had, and so they had a clinical treatment. So basically they had this thing for people with basically treatment-resistant depression. So any people who have basically you've tried pill A, doesn't work, pill B doesn't work, and now you're on like the last stage. So this is a large cohort of people. Basically, their trial that's going through the FDA process is to address that, and it totally treats it. It really takes care of those people where they actually are left with no option.
What phase are they on?
So now they're on 2B. So they have 216 patient treatment-resistant depression patients that's on 2B. Prior psilocybin clinical trials have shown a 60 to 80% positive, significant positive response.
What's the ticker? U.S. or Canadian company?
It's a U.S. company, CMPS, Compass Pathways.
Okay.
So it's psilocybin. It's a form. So what they have is basically it's a combination of psilocybin, which is magic mushrooms, the pill, in different, and what they're working out right now is what's the correct dosage, which, but that's not, it's not take a pill, go home, we'll see you in a couple of weeks. It's take a pill. There's a therapy regime. This is basically, you have a therapy, you're working with a therapist, and basically you do that treatment once and you don't come back for a year, another half a year. So you're not on that pill every day, which if these pills are strong. They do all sorts of weird things to your body, right? Especially for older people, right? So in terms of the ability of older people to from a physical level to take antidepressant medications every day versus taking a one-time per year dosage of Comp 360 with a therapist, that's a much better spot to be.
So, I guess, I could keep going down this train of thinking, but I want to get to one more, and then believe it or not, it's almost been an hour. We said that we're going to do this.
Oh, wow.
The funny thing about not being, TV per se is you're not cut off, on the hard hour. And anybody knows me knows I like to go a little bit late. But anyway, let me just ask this question though. Psychedelics. I mean, I was at the 60s, the 70s. Like, obviously, there was a fear factor with using them. So, what changed? Why did they get back into business or a real business that is now actually having FDA trials?
So I think what we've obviously, that was you had the period there where everyone were experimenting, etc. I think time just went by, and then people you'd have in these clinical settings, like they would actually be like trials, like so you were allowed to do that where you're saying, wait a minute, this can treat PTSD, right? Ecstasy has anyone who's used MDMA or psilocybin knows that the mind-altering effects are so significant, right? The empathy, they're just the things that that overwhelm you, to then just be like, that's just a recreational drug. I think that that is, I think what we've really gone through is the cusp of taking it from that place and then applying it. In obviously in this case with Compass Pathways in a significant way, right? And so I just think we're at that part, and this is society's like I would say hang-ups around drugs and the word drugs. I think those are all just melting away. You just want good people, man, and that that's not that is not indicative if someone smokes cannabis, right? I'll tell you for a fact. I know more I know of more instances of men who are abusive because they're alcoholics, and I don't know that many if you were to look at potheads that are abusive versus alcoholics, I would say alcohol is a much worse thing. So I think in general you're getting an acceptance that these things aren't the boogeyman that people thought they were, and I think we're in a much better place.
I want to get your last pick for us. Danimer?
Oh yeah. So Danimer Scientific. That's an ESG play straight up. It's
okay.
So it's a bioplastics. So they're in the bioplastics business, and they've created a compound that basically is equivalent to plastic, but it biodegrades in 90 days to maybe in suboptimal conditions up to a year. But so the biggest issue, let me talk about plastic, right? The misnomer that we put things like these blue bins are very bad in the sense that people have this view that you put it into a blue bin and it just goes into the sorting machine and it comes back as a bottle. That is the furthest from the truth. Most of this stuff is with the word for it, basically it's contaminated, so it has to go then directly to landfill. And if you're close to the coast, it just goes into the water, right? So we have those islands, those plastic islands, those very everyone knows those in I think it's the Pacific. It's actually a massive landmass, right? So the idea of dealing with plastics vis-a-vis recycling, I think, is not a starter, right? So we know we need a better solution, and I think we as humanity are ingenious enough to do these things, right? And so this bioplastic is very fascinating in that it biodegrades. So you just put it in with the trash and it goes, and that to us is a far more elegant solution than than this idea that these things get recycled. They don't, or go into the ocean, even worse, where it basically goes into landfill and it biodegrades, right? And I think that's far more positive. the other aspect of this too is you've also got the tailwind of regulation. So in Europe, I think it's the end of this year or this year itself, basically there will be no disposable plastic utensils.
Right.
So that goes away. And that I think is coming in Canada as well. And India has gone for that as well. So all of these regions are going for basically zero plastic. We obviously in Toronto, we've seen that happen with the extinction of the plastic bag.
Right. So with Danimer, what's the ticker? Where does it trade? Does it have any following, street following, analysts, etc.? And one more question: do they have any big customer wins?
Yeah. So they've got Wrigley's. They're the largest. They are the gorilla in the room, right? So you're gonna see like Skittles packages very shortly with the Danimer, basically the bioplastics around them. And
Skittles. Is that true? I mean, out of all the candy, it's Skittles.
Well, one of them. No, it's like the whole like you're gonna get it on everything, right? It'll be the whole kit and caboodle.
We might be the same age if you're talking about Skittles.
You know, those candy stores never change. It's still the same things. It's still yes. So it's gonna be a plethora of whatever Reese's Pieces, whatnot. But they're working with all the big guys. But secondarily, the other aspect is that they are by far the biggest, right? So they're the ones that are positioned to be the aggregator. And it's a game of cost too, right? So at the end of the day, scale is everything. So if you're the bioplastic producer that's 50 times bigger than your next competitor, that's your edge. The other aspect too is this regulation that we think is huge, and also in terms of, I think the question was around institutional coverage. Jefferies is covering it.
Okay.
I don't have my Bloomberg up, but I believe there's probably one or two other brokers that are covering it as well.
Okay, that's always kind of good to know in terms of just understanding where it is and its development.
Yeah. So and Catherine, one thing. So we did a Grizzle Cannabis Con. It was basically we had all the leaders in the U.S. Cannabis sector come. That was a good little download here. But in Psychedelics, we're doing Grizzle Psychedelics Con on June 28th, and that will be so for me too. There are a lot of new companies that I don't fully know as well. So I'm still getting up to speed on what's out there in the market. So but Psychedelics is truly one of the most interesting spaces in terms of there is unmet need. And that is, there's a significant portion of the population that is dealing with clinical depression, PTSD. These problems aren't being fixed, and we need fixes for them.
Well, and especially now with COVID, I think that everybody's really tried to make it through as best as they can. And I think people have. At the same time, I think that, there will be a time period whereby people probably have had to go through things that they haven't been able to deal with because you're just in this atmosphere, and they will deal with it more so perhaps when we get back to normal for whatever reason. That's just probably how this is going to evolve a bit. So yeah, I hear you. Go ahead.
No, yeah, I think you're bang on. It's I think obviously we've saved lives by doing what we've done, but I think on the other side, I think there's a lot of pain that has been created, and especially for young kids too. I think it's a very challenged situation for I'm not sure that I think what we're going to deal with on the other side, especially as it relates to addiction, as specifically around video games or what it actually doesn't have to be it doesn't have to be alcohol or whatever. There are a lot of kids they're gonna need deprogramming, if you will.
Yeah, you're right. One of my dear friends, she's a doctor, and she sent out an Instagram with her child climbing up a tree. And I'm like, that is the best thing I have seen or heard of in forever. Like, remember when we were little, you just went outside and you climbed up a tree. Hang from it for as long as you can. That was the goal. You can do it longer, you or your brother.
Yeah, that's right. That's right. And we got to get back to that. But at least the sun is out now, and you're like, what? It's I'm going to go camping tomorrow. I'm taking the kids. I'm like, listen, pull you out of school. There is no school. It's all virtual anyways. Whatever.
Exactly. Exactly. Okay, just to wrap it up here. We didn't really go through any of the meme stocks. We don't necessarily need to. I'm not sure that you're in any of them. So unless there is one that you think is great, but they're very volatile. What's the last word as it relates to any millennials listening in these meme stocks?
Yeah, so I wouldn't discount it, and I think we were talking in the green room earlier. Yeah. We were talking about what's the staying power of this meme phenomenon. Is it going to be this year, or is it till the next downturn, or is this forever, right? Or is the new Wall Street going to have like 5 people who are analysts that are like trolling Reddit boards or Twitter? Maybe, right? And yeah. So I personally think this medium, and we were talking about it in the beginning, is not going away. Like, so this is you're going to have these avenues that are new ways of where information is disseminated. But I think some of these strategies are basically go up, blow up strategies that are totally crazy. Like, and I think that is one of those where just be careful. The one thing we've been saying, a lot of people say, well, should I own, it's all very mean, AMC, all this sort of stuff. We say, listen, if you want to do it, it's fun. It's like, there's lots of fun, but don't use as much money as you would if you were to go to the casino and use the one-armed bandit, the slot machine. Whatever money you feel comfortable putting in that slot machine, that's how much money you should put on this strategy. And so I try not to devote a ton of airtime on all this stuff. We try to explain the dynamics about what's happening in terms of like their strategies of using options to like, squeeze up the stock. It's all fascinating stuff, but I think people can get easily lured into this incredible riches. I don't have to do anything, life will be better. It never works out like that. It never works like that. You may win one, but it's like the one arm, like the best thing after you win a jackpot is they'll load you up with drinks. You just keep staying there, right? Don't move away from that machine. It may pay you again, but it likely won't. It'll just take your money back.
Yeah, that's when you leave.
Yeah, that's right.
Get out of the casino.
That's right. If you think about it, who wasn't, obviously now he's become, an icon, but Mark Cuban's business wasn't a great business. Like but what his acumen was selling at the top of the .com bubble. Right. Yeah. Like he wasn't an Elon Musk in the sense that, he kept in, but he sold at the top of the, he sold his .com at the top of the .com. He at least understood it, right? He sold his business there. Then he went and bought the Dallas Mavericks and then ended up becoming this kind of like, hey, listen, I can, an influencer of sorts, right? But in terms of, at least he knew he was at the casino. Most people didn't, like everyone else in .com didn't know they were at the casino. They're like, oh, just, and that I think is the biggest, as long as you have a understanding of where you are, and your head's not filled with illusions of grandeur, you're totally fine. But once you start to drink your own Kool-Aid on, I'll bank the next 5 meme stocks. We'll squeeze these guys. The hedge funds are going down. It's then you're part of some army that you never really enlisted for.
Okay. We will leave it on that note. This has been so fun. I love talking to you. It's been a blast. And I love your insight, your background. You come at this obviously from experience on Bay Street and Wall Street, having run money for a long time. So thank you.
Thank you very much. India, let's do it again. We'll do it
again. And everybody knows where to see you and find you. Do you want to tell them where?
Yeah, so grizzle.com that's at least the website, but we live on Twitter a lot. We have a YouTube as well. So, that's where you'll find the Grizzle Cannabis Con, the Grizzle Psychedelics Con. We're everywhere, but the fun thing is I'm so, it's a lot of fun to see you outside and, in this new world of just doing our own things is such a fun place.
So fun. I feel creative. Like I was when I was at Montessori.
Right.
Okay. Not to scare anyone. No. That was the premise of Montessori. It was your day to create. You were the creator. And it's interesting because Jeff Bezos went to Montessori. I'm not making a comparison, but what I'm telling you is that I've met some tech people over the years, and they talk about this Montessori mafia out in Silicon Valley. And I've been meaning to figure out who's actually in it. Actually, you can look it up. It's pretty interesting.
No, I have. I know this for a fact, right? It kind of is one of those things where you're like, when I think of the asset, and this is if there are millennials, anyone watching, we're entering the era of creative capitalism, right? And if the Montessori, had a structure of really bringing out creativity, right? And whoever you're betting on right now, You want to value them on a bunch of quotients. You don't want creativity to be a bottom factor. You want to always bet on the creative leaders, right? And that, I think we're totally entering that era, and we're in that era, right? Of creativity trumps all, and I think that it's creating a lot of stress for the banking establishment, for the media establishment, right? This is like because the reality is you're not controlling the pipes as you once did.
Yeah, I think the content is controlling the pipes. I think it's reversed.
Bingo. That's it. That's the line. It's content first, and that that's what it always should have been. But it's like that's like the old world of what's his name who owned all the press companies. Out in Australia.
Well, Murdoch.
Rupert Murdoch.
Murdoch. Yeah.
Like, I don't think we're gonna see that kind of concentration of media power again. Like we're basically, where he set the tone for all of his, like it was like basically all the guns were pointing the same way. I can't imagine a place 20 years from now where you're gonna see basically a Rupert Murdoch saying, all of you YouTubers point that way. It's not gonna happen, right?
I can't even visualize that. Maybe I'm not creative. I'm kidding.
Well, you know the deal. And they all had the same headlines. They all had the same headlines. But it was fine. Like that was and it wasn't just Rupert Murdoch. That was every media establishment, whether you were NBC, like, you've seen those montages where basically the nightly news is like, at all the local news places, they're all saying the same line and they clip them all together. So whether you're in Alabama or wherever, they're all saying the same line about some social issue. You're like, what's going on? But it's all coming from head office. Guys, say this. And it's, anyhow, I think, when I look at guys like Joe Rogan, I think like a guy who just doesn't care, right? He's on a platform in Spotify where they are very woke over there, and he's not very woke. Like, he's not, so when he does an episode that they don't like, and they paid him millions upon millions, when he does an episode that they don't like, they just simply don't put it on the platform.
Oh, no.
It's like, if that isn't creative control, I don't know what is, right?
Oh,
like, whatever.
Yeah. Well, hopefully everybody, to your point earlier, about, I think it had to do with cannabis, but just, we've got to bring some niceness back to the world. That's for sure.
For sure. You know what? And we're coming back. It's good.
Yeah, we're coming back.
We're coming back.
Okay.
We're slowly.
And
Catherine,
I will
thank
see
you.
Thank you. We're going to do this again, of course, but we'll do it somehow in person too. It'll be fun, I think, to do it at a restaurant, maybe a bar.
Hey, let's do that.
Next one's at a bar.
Yep. Patio.
Okay.
Get a nice patio going.
Yeah, maybe an audience too.
Yeah.
In person.
Let's
All right,
do it.
Okay, we're going to say goodbye to everybody. Thank you very much, Thomas, George, and Grizzle. And thank you, everybody, for watching. We'll do it again. We'll see you soon.
Thank you.